So I think what's remarkable here is how much worse, when you look at individual stocks, how much worse stocks look versus the index. The SPX and the NASDAQ are still only about 3.5% off their highs, which, given the bloodbath that you're seeing in everything from recent IPOs to growth tech to cyclicals, I mean, retailers today are still puking. It's really remarkable how well the indices are able to hold up, basically on the back of, I don't know, Apple and Pfizer. Like, it's really a wild situation. The materials and industrials are in pretty substantial pullbacks here. If you're bullish on economic growth, even if you acknowledge that this variant might be a step backward for a couple of months until we get our bearings, those stocks are probably buys. Transports have been slammed. Those are probably buys. Airlines are tougher. So I don't think we could just say, like, across the board, buy them or sell them. If you're bullish Disney, this stock's at 52-week lows. It's 30% off its high. You can understand why. But keep in mind, throughout Delta, Disney was able to rally because of Disney Plus. The theme park, we just said, forget it. It's a next year story. So that's a stock that could reverse substantially higher if in fact, the virus is not the worst thing ever. So I agree with all of the commenters about how much uncertainty there is. It makes sense for stocks to be behaving the way that they are. I think that's perfectly normal, perfectly natural. But one thing I would say is South Africa has a 28% vaccination rate. It's not a surprise that that's where a variant of concern is coming from. Literally, 2/3 of the country aren't vaccinated. And how do you get a variant? It sits inside of an immunocompromised person for long enough to start mutating. So we should never be shocked that there are going to be, quote, virus surprises coming from somewhere like South Africa with that low vaccination rate. If you were a seller of stocks, every time something scary health-wise was coming out of Africa,
no doubt,
you've never been in the market.
No doubt. But if you
We've had to live with this since Ebola.
Understand. But if you also have a Fed at the same time, which is suggesting, yes, OK, but we're still tapering sooner than maybe you and the market expect, you get a reaction like you have today.
What if?
We're at the lows of the day as we have this conversation.
I'm glad you brought that up. What if the Fed is partly responsible for some of the inflation and not all of it is supply related? Because when you look at the Conference Board survey for November this morning, here's what you see. You see the expectations of people that want to buy a major appliance. That's now at the lowest level since May. Expectation of people who want to buy a home. That's now the lowest level since 2015. Expectation of people who want to buy a car. Lowest level since October 2010. A lot of the inflationary, supply-driven stuff on the appliance and manufacturing side is starting to subside. And then home prices, stock prices, if those things start to mitigate, that's not actually the worst thing ever. So the Fed, I think, is giving itself the opportunity, in case this Omicron is not as bad as expected, to go ahead with its existing plans. I don't agree that all of a sudden everything's changed and they've switched their narrative. I just think, and I think Rick is saying this, I think they're giving themselves the latitude to do what they need to do when we actually get the data that they want to see. Of course.